In today's show, I'm going to be sharing with you 3 reasons why market strategist Lyn Alden is increasingly bullish on Bitcoin right now. She went on the record to share, "I'm neither a perma-bull on Bitcoin at any price or someone that dismisses it outright. As an investor in many asset classes, these are the 3 main reasons I switched from uninterested to quite bullish on Bitcoin earlier this year and remain so today." One of those reasons is the scarcity of Bitcoin, with only being 21 million coins. And the 2 other reasons I'm going to be breaking down for you right here in today's show. Also, in today's episode, a wave of Bitcoin bull runs will crush crypto critics, says one of the world's most renowned historians. That's right, he goes on the record to share that many Bitcoin boom and bust cycles are coming, and critics of the largest cryptocurrency will ultimately be proven wrong. He went on to share this on the Unchained podcast and goes on to share that he believes Bitcoin will emerge as a mainstream store of value akin to gold. I'll be breaking this down for you here in today's show. Also, in today's episode, institutional demand for Bitcoin soars as Grayscale reveals record-breaking near $1 billion quarter. That's right. This quarter, they did over 905 million, which is nearly double the previous quarter's high of over 500 million in the first 3 months of the year. So extremely bullish signs here. One reason behind the surge in investor demand for Grayscale's Bitcoin and crypto funds is the coronavirus crisis and the massive government and central bank stimulus measures put in place to offset the economic damage it wrought. I'll be breaking this down for you here in today's show. We'll also be taking a look at the overall crypto market. It's good to see Bitcoin and most the altcoins back in the green. Where's the Bitcoin price likely to go from here? Find out all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And before we kick off today's show, if interested in tapping into OPM and leveraging other people's money to grow your wealth and crypto portfolio, be sure to smash the link right below this video in the description and register for this free system entitled OPM Wealth. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's kick it off by diving into today's top story of the day. I'm going to be sharing with you 3 reasons why market strategist Lyn Alden is increasingly bullish on Bitcoin. Strategist Lyn Alden says she switched from uninterested to quite bullish on Bitcoin in 2020, so just earlier this year, following the drop of Bitcoin to sub $3,600 as a result of the pandemic back in March. She remains optimistic on the top crypto. Alden, who found Lyn Alden Investment Strategy, wrote, "So I'm neither a perma-bull on Bitcoin at any price or someone that dismissed it outright. As an investor in many asset classes, these are the 3 main reasons I switched from uninterested to quite bullish on Bitcoin earlier this year and remains so today." So here's the 3 reasons. Number 1, scarcity of Bitcoin. Unlike traditional financial assets, even gold, the supply of Bitcoin is fixed. No more than 21 million Bitcoin can ever exist. And let's not forget the millions of Bitcoin lost forever, which makes Bitcoin a deflationary currency. Scarcity could give Bitcoin value. Alden explains in her paper, there are no central entities that could alter the monetary policy of Bitcoin. Hallelujah. If the demand for Bitcoin continues to increase and its supply remains the same, it can push the value upwards. She goes on to share, Bitcoin's protocol limits it to 21 million coins in total, which gives it scarcity and therefore potentially gives it value if there is demand for it. And is there demand? We're going to be discussing that in detail here in today's show because there is a lot of institutional demand, to say the least. The scarcity of Bitcoin by itself does not give Bitcoin value. There has to be demand from the market to support it, but there are other characteristics of Bitcoin, such as fungibility, transportability, immutability, and decentralization that makes it a practical store of value. Bitcoin also remains highly dominant over thousands of cryptos in the alt market. In terms of market capitalization, Bitcoin accounts for 62.4% of the entire crypto market cap currently. That figure includes coins that potentially have insufficient liquidity to justify their valuation. The dominance of Bitcoin and therefore its network effect makes the top crypto even more compelling as a long-term hold, Alden said. And as we can see here, the percentage of total market cap by dominance, we have influencers such as Max Kaiser, who went on the record to share he believes we're going to see a 99% Bitcoin dominance as Bitcoin eviscerates all competitors. All right, now for the next reason why she is so bullish. The May 11th halving, when the Bitcoin blockchain network underwent its third block reward halving. Approximately, it goes through this every 4 years. A halving gets activated, slowing down the production of Bitcoin by half. And I want to remind you that back in 2012, when we witnessed the first halving, within 2 years, Bitcoin soared over 50,000%. Then the second halving, which occurred in 2016, over the course of 18 months, Bitcoin surged over 4,000% to reach an all-time high of about $20,000 back in December of 2017. Now, the purpose of a halving is to decrease the rate of Bitcoin production gradually as Bitcoin approaches its maximum supply of 21 million coins. A halving cuts the block reward miners receive by half, leading to a massive decline of miner revenues for a brief period. For example, it may cost currently about $14,000 for the average miner to mine one Bitcoin, even though Bitcoin's hovering just above 9,100. So that's what we're talking about here. Now, following every halving, Bitcoin historically saw extended price rallies. The previous halving occurred in 2012 and 2016, and at the time, Bitcoin was hovering at $11 and soared to $650, and in 2012 and 2016 respectively. And now, Bitcoin remains above 9,000 after reaching a record high of 20,000 in December of 2017. Alden wrote, Bitcoin has historically performed extremely well during the 12 to 18 months after launch and after the first two halvings. I repeat, during the 12 to 18 months after launch. So a lot of you are like, yo, Bitcoin just had a halving. Why aren't we to the moon? Well, it hasn't been 12 to 18 months yet. So if history rhymes, that's when it's going to take. Probably next year, Bitcoin is going to be at an all-time high for sure. It could even occur this year. I'm on the record sharing I believe Bitcoin will crush its all-time high set back in December of 2017. This year, by the end of the year, we still got about 5 months to go. Let's go BTC. She goes on to share the reduction in new supply or flow of coins in the face of constant or growing demand for coins, unsurprisingly, tends to push the price up. That's a fact. And we can see here the average USD market price across major Bitcoin exchanges. Those little red dots represent just before the halving occurred, the inception, and then we can see the massive parabolic growth as a result. The historical performance of Bitcoin subsequent to previous halvings raises the probability of another prolonged uptrend. And the next reason why she's so bullish, the backdrop of heightened levels of inflation. In May of 2020, billionaire hedge fund investor Paul Tudor Jones praised Bitcoin and described it as a great speculation. He also went on to share it's the fastest horse in the race. We're talking about an Italian thoroughbred. So put your money on the right horse. Bitcoin, baby. Tudor Jones said he holds just over 1% of his net worth in Bitcoin. We're talking about hundreds of millions of dollars, by the way. He explained that the potential devaluation of cash strengthens the value proposition of Bitcoin. He said, every day that goes by that Bitcoin survives, the trust in it will go up. Touche. That's a fact. Similarly, Alden said that other hedge funds have been investing or experimenting with Bitcoin as of late. She went on to share smaller hedge funds have already been dabbling in Bitcoin, and Tudor Jones may be the largest investor to date to get into it. There are now firms that have services directed at getting institutional investors on board with Bitcoin, whether they be hedge funds, pensions, family offices, or RIA firms. Crucial metrics such as the assets under management AUM of the Grayscale Bitcoin Trust indicate institutional activity in the Bitcoin market is rising. Data shows the AUM of Bitcoin is now at 3.55 billion, around 500 million higher than during the peak of 2017. As we can see in this graph, Grayscale Bitcoin Trust total assets under management. Also, this second quarter, they just did over 900 million in Bitcoin. We're going to be covering here a little later in the show. So, a confluence of Bitcoin reaching its fixed supply of 21 million coins, a bullish post-halving trend, and growing institutional activity could benefit Bitcoin's long-term price trend. Let me know where you think the Bitcoin price is likely to head by the end of this year. Make your prediction in the comments right down below. And before we break down our next story of the day, a wave of Bitcoin bull runs will crush crypto critics, says one of the world's most renowned historians. Let's first take a look at the overall crypto market. We can see Bitcoin and most of the altcoins back in the green, which I love to see, especially being an herbalist. Bitcoin up about 1% for the day, maintaining just above that 9,100 support. We have Ethereum up about 1% as well, trading at $234. XRP up 3%, trading just below 20 cents. Chainlink, which recently reached new all-time highs of about $8.82, is still up 4.7% for the day, trading at $8.60. I wouldn't be surprised to see Chainlink smash $10 very soon. We also have many other altcoins currently surging against Bitcoin, including Stellar Lumens up a whopping 16%, trading at 10.6 cents for the day. We have Algo up 32%, trading at 36 cents. We have ADA up 1%, trading at 12.5 cents. Miss Litecoin up 1%, trading at $42. And now let's take a look at some of the top exchange volume. Binance down 28% for the day with 3.9 billion in volume. Hobby Global down 36% with 2.2 billion in volume. OKEX down 18% with 1.8 billion in volume, and BitMEX down about 40% with $674 million in volume. All right, now let's break down our next story of the day. One of the world's most renowned historians says that many Bitcoin boom and bust cycles are coming, and critics of the largest crypto will ultimately be proven wrong. That's right. In a new interview on the Unchained podcast, Niall Ferguson says he believes Bitcoin will emerge as a mainstream store of value akin to gold. Ferguson, a senior fellow at the Hoover Institution, says Bitcoin will ultimately prove itself as a hedge against reckless monetary policies like we're witnessing right now, right? Printing trillions of dollars out of thin air in the name of quantitative easing. He goes on to share the obvious argument for something like Bitcoin is that you're creating at least a store of value, maybe not a particularly efficient means of payment, but a store of value that you'll be able to rely on, even if the Argentine government or the Zimbabwean government or the Venezuelan government decides to crater the currency with extremely reckless, time inconsistent monetary policies, which we all know central banks, that's their business. That's what they do at the end of the day. You feel me? The second point to notice, which is generally missed by the people I know in the crypto community, is that the argument that you're solving the problem of inflation works much less in the developed world, because in truth, countries like the US, most European countries, as well as Japan, ceased to have a problem with inflation some time ago. The inflation spike was in the first decade of fiat money in most of those countries. Since the beginning of this century, the problem has in fact been deflation, not inflation, and the recurrent headache of central banks, first in Japan, then in the United States, and then in Europe, was that they couldn't in fact keep the inflation rate in positive territory. That became acutely scary after the 2008 failure of the Lehman Brothers, because it seemed as if the world was going to be plunged into a second Great Depression with debt deflation driving us in a dire tailspin as in the 1930s, and the central banks had to work extremely hard to avoid that by using all kinds of unconventional monetary policies. What it looks like to me is that the central banks and the government and the Fed is purposely devaluing the dollar and setting themselves up for a massive economic reset, financial reset, crash, whatever you want to call it. But all I know is this: as the rich get richer, the poor seem to get poorer. However, if you could hedge against the dollar and start investing into Bitcoin and cryptocurrency, you can at least be on the winning side. So even if you can't even afford an entire Bitcoin, it's okay. The cool thing is you can download the Cash App. You can purchase $10 of Bitcoin. You can purchase a little increment every week. You can dollar cost average. The bigger goal is to get your hands on some BTC while you still can, because when it's trading at $100,000, I mean, all we got to do is like 10x from here, move up 1,000%. All of a sudden, we have a 6-digit valuation on the Bitcoin, and then people are going to be like, oh my God, I can't afford it. Now it's too late to get started. No, it's not too late, because a Bitcoin can be divided into 100 million Satoshi. So you can literally purchase any amount of it. It's so divisible. It's amazing. Whereas the US dollar can only be divided by 100 pennies. Bitcoin can be divided by 100 million Satoshis. So don't forget it. Ferguson says he can guarantee another Bitcoin bull run is coming. I repeat, Ferguson says he can guarantee another Bitcoin bull run is coming, with Bitcoin's trademark volatility set to continue in a series of bubbles. Here's what he said: what you're seeing when Bitcoin's price fluctuates widely, as it's done in the last 5 years, it's not variations in the supply of the US dollars. These are fluctuations in the expectations of investors about the future of Bitcoin. And as we all know, those fluctuations have been enormous because there's great uncertainty about the future of Bitcoin. It only seems like the other day that influential economist Nouriel Roubini was calling Bitcoin a ish coin and predicting it would go to zero. It's not that long ago that Nobel Prize winning economist and New York Times columnist Paul Krugman was dismissing Bitcoin in much the same way that he once dismissed the internet as a kind of nothing burger. And there's all kinds of confusion, uncertainty, and downright error about the future of this particular instrument. And that's why we will have another Bitcoin bubble at some point. I can guarantee that. And during that whole cycle, which will be what? The fifth? I've lost count of the big Bitcoin bubbles there have been. There will be the same debate that we have had back in 2017 between the people who say it's going to the moon and the people who say it's a ish coin going to zero, aka Peter Schiff. And both of these views will be wrong. Over time, I think Bitcoin will cease to behave like an option. I think it behaves like an option on digital gold right now, a term that I owe to my friend Matthew McLennan at First Eagle. Gradually over time, the longer it survives and the more useful it appears to be, Bitcoin will behave less like an option on digital gold and more like digital gold. I take the view, and I'm probably going to annoy a majority of listeners now, that Bitcoin isn't going to become money in the sense of the means of payment. I think Bitcoin is a kind of digital gold that people want to hold in their portfolios because it has behaved different from other asset classes and it's not closely correlated with them. And I think the more people who take the view that Bitcoin will live, that Roubini is wrong, the more people that will hold it in their portfolios. And that's a preference for Bitcoin as an asset with diversification quality will push up its price. Its price will not go up gradually. It will go up in steps, and each step will look like a bubble. And each time the bubble bursts, Nouriel Roubini will say, you see, and each time he will be wrong. And let's also include Peter Schiff in the mix, as he's been preaching Bitcoin going to zero for the longest time. It's getting old. Ferguson isn't offering any predictions on exactly when the next Bitcoin bull run will begin. However, in the short term, he says global events such as increasing tensions between the US and China, as well as internal political turmoil in the United States, could be catalysts for a rise in the price of Bitcoin. I agree 100%. We have Max Kaiser, who went on the record to share he believes the Bitcoin price will trade above $400,000 due to hash rate power wars occurring in different countries around the world. We currently have countries like Iran that control 3% of the hash power. Which other countries are going to be competing? All I know is this: those who jump on it are going to lead the future world. Is the United States government purposely destroying the United States economy? Is there a global economic reset occurring right now? Let me know your thoughts in the comments right down below. Now, before we break down our next story of the day, institutional demand for Bitcoin soars as the Grayscale Bitcoin Trust reveals record-breaking near $1 billion quarter. But first, let's take a look at the overall crypto market cap, sitting at $269 billion with $51 billion in volume in the past 24 hours. And the current Bitcoin dominance is 62.3%. And now taking a look at the top gainers within the top 100, we have ampleforth up 48%, trading at $2.60. Aurora up 45%, trading at 2 cents. Algorand up 31%, trading at 36 cents. Digitex futures up 20%, trading at 8 cents. AVE up 18%, trading at 29 cents. And Engine Coin, Go ENJ, up 16.5%, trading at 20.3 cents. And as we continue scrolling down, we also have Synthetics Network, Ren, Stellar Lumens, iExec RLC, and the list goes on and on. And now for the biggest losers within the top 100 in the past 24 hours, we got Flexicoin down 34%, trading at 0.002. Divi down 4%, trading at 6.6 cents. Quant down 2%, trading at $7.08. Hedge Trade down about 2%, trading at $1.33. Monero down about 2%, trading at $67. And Waves down 1.5%, trading at $1.35. And as we continue scrolling down, we have Satoshi Vision, Maker, Verge. Not as many cryptos in the red as there are in the green. I'd say it's about an 80-20 split right now. So, which means checking out the BitMEX margins, the bulls are back in control, leading with 52 million in superiority in the last 24 hours, with longs leading 54.1% versus 45.8% shorts. Are you currently bullish or bearish on the king of all cryptos? Let me know in the comments right down below. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 41 in fear. Yesterday was a 43, last week a 41, and last month a 38 in fear. And if you're not familiar with the crypto greed and fear index, extreme fear can be a sign that investors are too worried. That can be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. All right, before breaking down our last story of the day of the Bitcoin Grayscale Trust revealing a record-breaking near $1 billion quarter, first, I want to remind you to click the show notes button below the video in the description by clicking show more in the description right down below for a detailed analysis of what's going on in the market. This goes for all 480 plus videos right here on my channel. Also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Not only is this updated every single day, it also allows you to download the latest episode of the show in MP3 format. Also, be sure to subscribe on YouTube by smashing the subscribe button right below this video or visiting the direct link, cryptonewsalerts.net. You can also follow us on Apple's iTunes, Spotify, Google Play, Stitcher Radio, as well as all the major podcasting platforms. And to receive daily crypto news alerts on Twitter, our Twitter handle is cryptonewsyes. And for those of you active on Facebook, as I am, I do have a private crypto Facebook group entitled Crypto Alchemy with over 17,000 strong from all over the world. To become a part of it, simply click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, as I am, I do have a crypto Telegram chat. To join, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down our last story of the day, shall we? And this is coming from Forbes, so this is mainstream news. New York-based Grayscale, which allows accredited investors to buy Bitcoin and other major cryptos through its funds, recorded inflows of $905.8 million for its second quarter, nearly double the previous quarterly high of $503 million. So they're setting records in this piece. In the first 3 months of this year, institutional investors, primarily hedge funds, accounted for 84% of Grayscale Bitcoin and crypto fund investment in the second quarter of 2020, up from 81% for the trailing 12 months. New investors represented 57% of the Grayscale investor base. I repeat, new investors represented 57% of the Grayscale investor base during the quarter, up from 49%. So you can see it's growing and increasing. Another uber bullish sign, though they only accounted for 124.1 million, that's all, of the inflow into the Grayscale digital asset products. Bitcoin remained Grayscale's most popular asset, accounting for 83% of investment through Grayscale. Also reported large interest in alternative cryptos, with demand for its Ethereum trust accounting of nearly 15% of total inflows at an all-time quarterly high as well. So it's not only Bitcoin, they're also purchasing up mass amounts of Ethereum. The Bitcoin price has been hovering around 9,000 since Bitcoin went through its fourth supply cut, known as the Bitcoin halving in May. However, Grayscale sees high demand for its Bitcoin fund as a potentially positive sign. I would say that again. Here's what they went on to share. With so much inflow to Grayscale Bitcoin Trust relative to newly mined Bitcoin, there's a significant reduction in supply side pressure, which may be a positive sign for the Bitcoin price appreciation, Grayscale wrote in a quarterly report released on Wednesday. Michael Sonnenschein, Grayscale Managing Director, was quick to point out that those investing into Grayscale's Bitcoin fund are not holding Bitcoin directly. Here's what he went on to share. It's also worth highlighting that comparing the rate of demand growth for a Bitcoin access product like Grayscale Bitcoin Trust to the rate of newly mined Bitcoin is simply to illustrate supply and demand in the market. Sonnenschein said via email, the comparison does not provide insight into the destination of any mined Bitcoin during the measured period. Grayscale isn't creating demand. Grayscale is reflecting demand in for the asset class, said Grayscale Research Director Philip Bonello, speaking on Grayscale's investor call following its second quarter report. So I repeat, Grayscale isn't creating the demand. Grayscale is reflecting demand in for the asset class. That's a fact. Check this out. Grayscale weekly inflows by product, you have an average of 69.7 million. And as you can see, we're now at an all-time high. If you look at the last big blue bar, which represents Bitcoin, and Ethereum is represented in the light green. Others have criticized Grayscale's reporting, arguing the asset manager is buying much less Bitcoin and other cryptos than thought. Grayscale buys way less Bitcoin than many would think. Ryan Watkins, a researcher at Bitcoin and crypto analytics firm Masari, said via Twitter, factor factoring in-kind purchases, Grayscale has only bought 31% of all new Bitcoins mined since the halving, far less than the 150% plus many have reported. This is just one of the many misconceptions about Grayscale's trust. Yes, many news reports have indicated they're purchasing Bitcoin at a rate of 3-to-1, but according to Masari, they're saying Grayscale is only bought 31% of all new Bitcoins mined. So they're saying they purchased 1/3, not 3 times the amount, which is an interesting correlation, right? Meanwhile, Grayscale investors are ramping up their exposure to alternatives to Bitcoin, with total capital inflow for Grayscale's various altcoin trusts is up almost 650% over the past year. Not too shabby, not at all. Bitcoin, by far the most well-known crypto, is acting as something of a gateway drug, according to Sun and Shine. While the most common point of entry for our investors is through the Grayscale Bitcoin Trust, the percentage of investors allocating to other digital assets is a strong indicator that there's not only demand for altcoins, but also demand for diversification within the asset class. Sun and Shine said, pointing to the data that shows 81% of returning institutional investors in the second quarter of the year have now allocated to multiple Grayscale products, an increase from 71% over the trailing 12 months. Grayscale's Litecoin Trust and its Bitcoin Cash Trust recorded their largest inflows since the second quarter of 2018. One reason behind the surge in investor demand for Grayscale's Bitcoin and crypto funds is the coronavirus crisis and the massive government and central bank stimulus measures put in place to offset the economic damage it wrought. Over the past quarter, investor conversations have often centered on the unlimited fiscal stimulus being injected into the system. Sun and Shine said this is increasingly being examined in the context of Bitcoin's verifiable scarcity, an attribute that provides investors with conviction that Bitcoin may help them build more resilient portfolios. And Barry Silbert, the chief executive of Grayscale Parent Digital Currency Group, echoed Sun and Shine. When you have so much uncertainty and there's growing spots of deflation, holding something other than cash makes sense, especially in the developing world, said Silbert, speaking on Grayscale's investor call. So, as you can see, there's massive institutional demand. Paul Tudor Jones, the Grayscale Bitcoin Trust, just so many people and institutions purchasing up Bitcoin and hodling. So, if this isn't uber bullish, then I don't know what is. Let me know what your thoughts are in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And real quick before I go, if interested in leveraging OPM, other people's money, to grow your wealth and crypto portfolio, smash the link below this video in the description and register for this free system entitled OPM Wealth. And I look forward to catching you on tomorrow's episode. Peace.